I'm Jelaney.
And I'm Johnny.
And we're going to be talking about finance and breaking down some terms for you guys to understand, and maybe discussing a little bit of what you'll hear on this channel and some terms that we use. And it's going to be a question and answer format. I'm going to be asking Jonathan here the questions so that you guys can hear the answers. Are you ready?
I'm ready. I'm ready to bring them on.
Okay, so first of all, what is a Fidelity Investment? Is that referring to a specific company? Is that a type of investment? What does that mean so our viewers can understand?
Yeah, so I say Fidelity Investment a lot, and Fidelity is just a specific company. They're a brokerage firm, and with brokerage firms, they're basically, think of them like bank accounts, and they used to be more brick and mortar, but they've pretty much moved to be online bank accounts now, and it's just a place to deposit your money, and then brokers will do the actual transactions at your behest, and put the money into a specific investment like a stock or a bond. So yeah, when I say Fidelity Investment, that's referring to that specific brokerage firm.
How does someone set up an account with a brokerage firm?
So
what
basically,
are the first steps, and what would I need to have if I was setting my account up for the first time?
Okay, so basically, all you need to have is just information and obviously some money to make an initial deposit, and it would basically follow the same process as setting up a bank account, and you can just do it online. So for instance, like with Fidelity, you would type in fidelity.com, and it would say which type of account you want to open, and then you would choose an IRA or just a standard brokerage account or whatever one you wanted, and you would go through just a series of very basic questions that would ask you, maybe your annual salary, whether you were a more conservative or aggressive investor, if you were only going to be buying, or would you be shorting or doing options.
Right. So that's plenty of examples of the questions that they'll ask, but what do our viewers need to be aware of as far as, one, is this safe? And two, how do you know that it is a legitimate firm? How do you know that you're not just getting scammed on the internet? What are some things to look for, some licensures that are labeled on the website? How do I know that something's legitimate? What are some maybe more major, more renowned, reliable firms that they can seek out?
Right, absolutely. Okay, so just a few off the top of my head, aside from Fidelity, would be Vanguard, Charles Schwab, E-Trade. There's a bunch of others out there, and I'll be honest, pretty much any of them that you see, advertised on TV or in a commercial, they're going to be legitimate. And how you can fact check that is all these different brokerage firms, they have to be registered with the FDIC or SIPC, and basically that just means
very similar signs as you're searching for a bank.
Yeah, exactly.
You're looking for the similar signs.
Yeah, they basically just have to be government regulated, and they have to have certain types of insurance. So yeah, again, it's very similar to just setting up a bank account, and you're looking for the same things. You want to make sure that they're insured, and you do want to find one that is big and maybe somewhat publicized, because that's pretty much tells you, okay, yeah, this is a well-known thing, that they're not out there scamming billions of people,
and probably more than anything get referred to it. Definitely.
Yeah, definitely. Yeah, and if you're really skeptical, you can actually go to a brick and mortar investment firm or go to your bank and get recommendations. If you're that skeptical about it, you can always do that. Awesome. And get an actual advisor if you're that worried about it, for sure.
Thanks. So we've discussed brokerage firms, we discussed the specific company and various companies that you would say are trustworthy and safe. And we talked a little bit about how to set up an account. So what exactly is a stock? If you could define that word for our audience.
Okay, how many sentences do I get for this?
We have unlimited time.
Okay, unlimited time. All right, so I'm actually going to define the term stock by using a illustration, just a little story. So I want you to imagine that somebody starts a muffin company in their kitchen, right? And they make
I love muffins.
Right, there you go. So they make muffins and they sell them, and they realize that they're actually doing pretty good, right? They've made some profit, and they start doing it full time, and the operation continues to grow. They make more muffins, they sell more muffins, and it finally gets to the point where they want to start having other people invest in it, right? They have so much going on that they can't continue funding the company with their own money. So they go and they seek out investors, and what they do in exchange for that, since they can't really give them anything physical, since they can't, pay them the money back, they offer them a portion of that company. In other words, they're offering them equity in that company. If you've ever seen Shark Tank, that's exactly what they're doing. They're saying, I need money, and I will give you this percentage of the value of my company in exchange for your money.
So I've got the Webster dictionary right here, and I'm going to read their definition of a stock real quick.
Okay.
So their first definition of it is the proprietorship element in a corporation, usually divided into shares and represented by transferable certificates. Another definition is a portion of such stock of one or more companies.
Right. So I was getting to that part. So I just wanted everyone to understand, exactly how it works. So.
Right. I'm just adding on to what you said.
Right. Exactly. So. It gets to a certain point where they decide that they want to take it public. Where basically what that means is that anybody in the world has the opportunity to do what the sharks do, to invest their money and to get a portion of that company, or as you just read, to get a share of that company. And so when they go public, they have to register with the SEC, with different investment firms and banks, and it's basically decided, okay, should this company be public? And so finally they take it public, and they fix an amount that each share of stock could be, and that is divided into the total worth of the company. So you have the total worth of the company, or its market cap, and it's divided into these different shares, and each share's necessarily the divided amount, and you add those all together, and it makes the total worth of the company.
Kind of how this definition, described it as a proprietorship element. That's pretty cool. So you have this element of ownership towards this company.
Exactly.
Even though sometimes it can be the smallest portion.
Right.
It's
right.
Still an ownership.
Yeah. When you buy a stock, you own a piece of a company, and that's something that's really important to realize, is that each stock that you own, that you actually have a say in that company. You actually own a portion of it.
And I know something that we've personally discussed is the fact that when you are making that kind of investment into a stock, we don't only look at the stocks and the percentages and the numbers. We look at the company itself.
Yeah, absolutely.
What are they standing for? What kind of discussions are they having? What are their leaders doing and saying? What's the representation for their company?
What are the values of that company?
Exactly,
yeah,
100%.
Exactly.
We
very,
look at those
very
values.
important. Very important. And that's actually that's something that you hear a lot of investors talk about, but specifically one that I really like is Phil Town, and he places a huge emphasis on this, and he recently has even gone so far as to say that if he doesn't love a company, and if it doesn't have an identifiable mission that matches with his values, he just
I was searching for.
He just doesn't even bother. And for instance,
what is the company's mission?
Right,
I love that.
Right. And he very much stresses that. And for instance, he says over and over again, I love guns and motorcycles, so I invested in Smith & Wesson and Harley Davidson.
Right.
And it makes a lot of sense, and it also
relevant and personal.
Right, exactly. And also the things that you're into and passionate about, that's always a good starting place, because you're going to know more about those things. So you're going to have more knowledge right off the bat. And makes a lot of sense.
Have a little bit of knowledge of, what's attractive to the general consumer.
Exactly.
I mean, mind you, that's a big stretch, but it definitely helps. I feel like it definitely helps.
For sure. And for you, for instance, if you are saying, okay, I want to find a stock, I don't know where to begin. Well, what's something that you like? What's something you're passionate about? Just give me an example of.
Equestrianism.
Exactly. Okay, so if you're into equestrianism, then you would be trying to find something that is horse related or at least farm or agricultural related,
Sure.
right? Something that has.
I mean, we could go on all day with the things
exactly. But that's a good starting point, right? That is where you start. You start with something that you like or you care about, and that makes the rest of the process a lot easier and sort of fall into place.
Awesome. So I think that's it for right now, unless you had
All right.
any other points to bring up or discuss.
Well, I mean, I could go on forever, but I guess we have a time limit for these.
I mean, not really. We could go on forever if that's what you so choose. But
Well, I don't want to go on forever, but, I feel like 10 minutes, I feel we could go for a little bit longer if you want to, if you want to share anything else with them or ask anything else.
like I said, I think that's it for me. But if you had anything else you'd like to add about the things that we discussed already. So we discussed investing a little bit.
Right.
Stocks.
Explain what a stock is and gave them some tips with maybe what brokerages to look at.
Maybe a little bit less feeling-based choices in, choosing a stock. Some of the things we discussed were a little bit more emotional. So what are some maybe cold, hard facts of, what actually sways you to choose one stock over the other?
Yeah, absolutely. Okay, so...
Because some of the things we discussed were just pure emotion.
Right.
What do I
right.
like? That's not
Right.
really...
Well, so basically you have, when you're choosing a stock, and I like to say when you're investing in a company, because that's all you're doing. You're investing in a company, and you need to think of it like that versus just a red or green blip.
Yeah, definitely.
You have what's called a qualitative method and the quantitative method. And the qualitative means kind of what you said, like, how do you feel about it? How does it match your values? What's the management doing? How does this company run in terms of what are they doing? And then your quantitative is the numbers, like you said, the cold hard facts. And personally, I lean towards the numbers just because I can just identify them easier, and that works better for me. But obviously both things are important. Some of the very basic things that you want to look at least for me, what has to happen to cross my radar is it needs to have low debt, because just like a person, trying to buy a house that needs a mortgage, pretty much everyone at one point in their life is going to have debt, and any company will have debt, but you want to see that debt shrinking, and you want to see the amount of money and assets that they have compared to that debt. You want it to be much higher than the portion of debt that they have, if they have any at all. That's extremely important, and that is normally referred to as their BVPS, their book value per share, or their price to book ratio. And it's just saying that their assets are more than their liabilities. And then you also have their debt to equity ratio, which is exactly what it sounds like. It's it's what they own versus what they owe.
Sure.
And that's the first thing, honestly, for me, that has to cross my radar for me to be interested. Second to that, it's really important to look at their PE and what's referred to as the price of earnings. And I'll get into that a little bit more in detail later. But basically, a lower PE is a good place to start, because it just, without getting too far into detail, a lower PE means that it's cheaper, that it's more undervalued, and that's what we're trying to find. So
breaking down the picking process that you've discussed already, can you like sum it up in like quick bullet points? So what all did you say? So first of all, what the company stands for, and their
values, right? And then secondly, their debt to equity ratio.
Mm-hmm.
So the amount of debt that they have compared to the amount of equity they have, it's self-explanatory. Their book value per share, or their price to book, which is essentially the same way. It's just a different way of saying the same thing. So it's what they own minus what they owe. Think of it like their net worth, right?
Yeah.
Their assets minus their liabilities. And then their PE, which is their price per earnings, which basically just means that every year they have an amount of earnings, and you divide the total worth of the company by their earnings, and that gives you the price of the earnings. And so if that's lower, that means that the company is cheaper or undervalued, which is good, because you want to buy something when it's on sale, is a way of putting it, or when it's not up to its full value. Did I summarize that well enough?
Yeah, I
Okay,
think
okay.
you summed it up well.
I tried to. Sometimes I get on a rabbit trail and I forget that like people aren't familiar with different terms and I'll just throw stuff around. But trying to make it clear and trying to explain everything fully.
Right. So don't forget to subscribe, like, and leave a comment if you feel so
Inclined
to
I
do
think
so.
that's one. Yeah, if there's anything that I didn't explain properly,
Or any questions, maybe something you didn't quite understand, that we're willing to answer anything. You
yeah,
guys have
absolutely.
To ask.
Just let us know, and I'll address it either in a future video or I'll leave a comment trying to address your question.
Yep.
Awesome. All right. See you later.